Hey everyone, welcome back to the Deep Dive. Don't forget to hit that like button, subscribe to the channel, and click that notification bell so you don't miss any of our future deep dives.
It's great to be back.
Today we're diving into a topic that's super relevant. Whether you're a UPSC aspirant, prepping for that economy section of GS3,
Mm-hmm.
or a student who's just interested in how the world works,
Mm-hmm.
or even just someone who wants to understand the Indian financial landscape better. Financial inclusion in India.
Absolutely.
We've got a stack of insightful reports and articles ready to unpack. And of
Right.
course, our expert is here to guide us through all the complexities.
It's great to be here. Financial inclusion is a really crucial aspect of India's development.
Okay, I'm already intrigued. But let's
Mhm.
start with the basics. For those who are new to this term, how would you define financial inclusion?
Well, the World Bank defines financial inclusion as individuals and businesses having access to useful and affordable financial products and services that meet their needs. We're talking about basic banking, savings, credit, insurance, and even digital payment systems. But here's the catch. These services must be delivered responsibly and sustainably, ensuring financial literacy and promoting financial democracy for everyone.
So it's not just about having a bank account, it's about having access to a whole suite of financial tools and understanding how to use them effectively.
Precisely. It's about empowering people to manage their finances, make informed decisions, and participate fully in the economy.
I see. It's about leveling the playing field and ensuring that everyone has the opportunity to thrive financially. Now, you mentioned that financial inclusion is crucial for India's development.
Mhm.
Why is that? Is it just an economic term, or does it have broader implications?
It goes far beyond just economics. Financial inclusion is actually linked to 7 of the 17 Sustainable Development Goals set by the United Nations. That means it impacts poverty reduction, gender equality, economic growth, and even social justice.
7 out of 17. That's a pretty big deal. So this isn't just some abstract concept. It has real-world implications for people's lives.
Absolutely. Imagine a woman in a rural village who finally has access to credit. She can now start her own small business, become financially independent, and contribute to her community's economic growth. Or think about government benefits reaching the intended recipients directly through programs like the Jan Dhan accounts, reducing leakages and improving efficiency.
Okay, that's a powerful image. A woman starting her own business thanks to financial inclusion. It sounds like India has a lot to gain by focusing on this area.
Yes, indeed. Financial inclusion has the potential to transform lives and drive inclusive growth.
So let's talk about India's journey towards financial inclusion. How has the country been performing in this area? Has there been any notable progress?
India has made some impressive strides, particularly in recent years. One of the most significant initiatives has been the Pradhan Mantri Jan Dhan Yojana, or PMJDY, launched back in 2014. This massive program led to the opening of millions of bank accounts across the country, especially among those who were previously unbanked.
Millions of new bank accounts. That's a huge step towards bringing people into the formal financial system.
It was a game changer for sure. And it wasn't just about opening accounts. The government also introduced the RuPay debit card, which provided account holders with a way to access their funds and make transactions electronically.
That makes sense. Having a bank account is one thing, but being able to use it conveniently is crucial.
Exactly. And to further facilitate digital transactions, the government launched initiatives like the Unified Payments Interface, or UPI, which we'll discuss in more detail later.
So it seems like there's been a concerted effort to leverage technology and make financial services more accessible.
Yes, and these efforts have had a significant impact. We've seen a remarkable increase in digital transactions in India, with UPI becoming one of the most popular payment methods.
That's fascinating. I've read about the rise of digital payments in India, and it seems like UPI is playing a key role in that. But let's not get ahead of ourselves. Before we delve into the digital side of things, I'm curious about other initiatives that have contributed to India's financial inclusion journey. What else has the government done beyond PMJDY?
Well, there have been several other noteworthy programs. For instance, the Kisan Credit Card Scheme, introduced back in 1998, provides credit to farmers for agricultural needs. It has been instrumental in supporting rural livelihoods and boosting agricultural productivity.
That's a crucial intervention, especially considering the large agricultural sector in India. Providing farmers with access to credit can make a huge difference in their lives and livelihoods.
Absolutely. And there have been efforts to empower women financially as well. The Pradhan Mantri Mudra Yojana, launched in 2015, extends loans to small entrepreneurs with a particular focus on women. This scheme has helped many women start their own businesses and become financially independent.
It's encouraging to see targeted programs addressing the specific financial needs of women.
Indeed. And we can't forget the role of microfinance institutions and self-help groups, which have played a vital role in providing financial services to underserved communities, especially in rural areas. These institutions offer small loans, savings products, and even insurance, empowering people to manage their finances and improve their lives.
So it's a multi-pronged approach, with the government, banks, and even community-based institutions working together to promote financial inclusion.
Precisely. It's about creating a financial ecosystem that caters to the diverse needs of the Indian population.
It sounds like India has made some impressive progress, but I imagine there are still challenges to overcome. What are some of the hurdles that remain in achieving full financial inclusion in India?
You're right. Despite the progress, challenges persist. While PMJDY was successful in opening accounts, a significant number of those accounts remain inactive. This suggests that access alone is not enough.
That's a real interesting point. So we've got the access, but usage and trust are still issues.
Exactly. People need to feel confident and secure in using financial services.
I see. And as we become increasingly reliant on digital platforms, I imagine data protection is also a major concern.
Absolutely. As more financial transactions occur digitally, data privacy and security become paramount. Safeguarding personal and financial information is crucial for building trust in the system. This is especially important as we move towards a more digitally driven financial landscape.
This makes me think about the role of commercial banks.
Yeah.
Have they been actively promoting financial inclusion in India?
Commercial banks have definitely played a role. Over the years, we've seen a push to expand banking services to reach underserved populations.
Can you elaborate on that? What are some examples of how banks have contributed to financial inclusion?
Well, the nationalization of banks in 1955, 1969, and 1980 was a major step towards increasing the customer base and reaching various parts of the country. This move brought banking services to a wider population, especially in rural areas that were previously underserved.
So the government has played a significant role in driving financial inclusion through these nationalization efforts.
Yes, and it went beyond just nationalization. The government also introduced specific schemes and policies to promote financial inclusion. For example, the establishment of regional rural banks in 1976 aimed to expand banking services in rural areas by creating institutions specifically focused on serving those communities.
It seems like there's been a consistent effort to bring banking services closer to those who need them most.
Absolutely. And to make banking more accessible and affordable, the Reserve Bank of India, or RBI, introduced measures like no-frills accounts in 2005. These accounts have zero balance requirements, making it easier for low-income individuals to open and maintain a bank account.
That's a great initiative to remove financial barriers and make banking more inclusive.
Indeed. And to ensure that banking services reach even the most remote areas, the RBI allowed banking business correspondent agents to operate in 2006. These agents act as intermediaries, providing basic banking services in villages and areas where physical bank branches are limited.
This paints a picture of India being quite proactive in creating a framework for financial inclusion. But what about addressing the specific needs of different segments of the population? For example, are there initiatives focused on women's financial inclusion?
You're right to highlight that point. Gender equality in finance is critical for overall financial inclusion.
Definitely. What are some of the specific programs or policies that focus on women's financial inclusion in India?
We've already touched on the Pradhan Mantri Mudra Yojana, which extends loans to small entrepreneurs with a particular focus on women. Additionally, the budget in 2019 expanded the interest subvention program for women's self-help groups, allowing them access to overdraft facilities. These are important steps towards empowering women financially.
It's great to see those targeted programs in action. But having access to financial services is only part of the equation, right? What about initiatives that promote financial literacy? How are we tackling that challenge?
You're absolutely right. Financial literacy is a key pillar of financial inclusion. Without financial knowledge, people can't make informed decisions about their money.
That's a crucial point. So what are some of the initiatives that aim to improve financial literacy in India?
The government and the RBI have been proactive in this area. One initiative is the establishment of financial literacy centers by commercial banks, a move encouraged by the RBI. These centers aim to educate individuals on basic financial concepts, products, and services. They conduct workshops, distribute educational materials, and provide one-on-one guidance to help people understand their finances better.
So these centers act as a bridge between complex financial concepts and the everyday citizen.
Exactly. And to further strengthen financial literacy efforts, the National Center for Financial Education was set up in 2017. This institution is dedicated to implementing the National Strategy for Financial Education, a comprehensive plan to enhance financial literacy across the country.
It sounds like India is taking a multi-pronged approach to financial inclusion, focusing on both access to services and the knowledge to utilize them responsibly.
That's right. It's about creating a holistic ecosystem where everyone has the opportunity to participate in the financial system and benefit from it.
This all sounds incredibly positive, but we also need to address the concerns that people have about using these systems.
Absolutely. Concerns about fraud and data security are real, and addressing them is crucial for building trust in the financial system.
You're right. So what measures are in place to protect consumers and address these concerns?
To mitigate these risks, we have regulatory bodies like the RBI's Ombudsman. They play a crucial role in promoting fairness and ensuring that consumers have a platform to address their grievances.
Can you tell us more about these ombudsman schemes? How do they work?
Certainly, we have three main ombudsman schemes: the Banking Ombudsman, the NBFC Ombudsman, and the Digital Transactions Ombudsman. Each scheme covers a specific area of financial services, providing consumers with a way to seek redressal for complaints against banks, NBFCs, or digital transactions.
So if someone encounters an issue with their bank or a digital payment platform, they can approach the relevant ombudsman for help.
Exactly. These ombudsman schemes act as mediators between financial institutions and consumers, ensuring fair practices and protecting consumer rights. They have the power to investigate complaints, pass judgments, and even impose penalties on financial institutions if they are found to be at fault.
That's reassuring to know.
Huh?
It gives people confidence that there's a system in place to address their concerns.
Precisely. And these schemes are becoming increasingly important as more people adopt digital financial services.
This has been incredibly informative. We've covered a lot of ground already. I think it's time for a quick break.
You're right. Let's pause here and pick up the rest of our deep dive into financial inclusion in India in part 2. Welcome back to our deep dive into financial inclusion in India. Before we paused, we were discussing the role of the RBI's ombudsman schemes in protecting consumer rights. These schemes provide a valuable avenue for individuals to seek redressal if they face issues with financial institutions.
Yes, and I think it's important to emphasize just how accessible these schemes are. Filing a complaint with the ombudsman is free, and they handle a wide range of issues, from disputes over transactions to complaints about unfair practices. It's great that consumers have this resource, especially with the increasing adoption of digital financial services.
You're absolutely right. The Digital Transactions Ombudsman, which was established in 2019, focuses specifically on issues related to prepaid payment instruments, mobile wallets, and other digital transactions. As more and more people embrace digital finance, this ombudsman plays a crucial role in ensuring fairness and transparency.
It's encouraging to see that a comprehensive regulatory framework is evolving alongside the growth of digital finance. It sounds like India is really trying to create a system that protects consumers and promotes trust in the financial system.
Indeed. The government recognizes the importance of establishing safeguards and ensuring consumer protection in this rapidly changing landscape. It's a dynamic process, and regulations are constantly being reviewed and updated to address new challenges and emerging trends in the financial sector.
All of this progress is really impressive. But are there any specific reports or indices that track India's progress in financial inclusion? It would be interesting to see how India's efforts are being measured and assessed.
That's a great question. There are several reputable reports that provide valuable insights into India's financial inclusion journey. One such report is the Global Microscope Report, published annually since 2007. It's compiled by the Economist Intelligence Unit in collaboration with Axion, a global nonprofit focused on financial inclusion, and other partners like the Bill and Melinda Gates Foundation.
So this report provides a global perspective on financial inclusion.
Yes, it measures financial inclusion levels across various countries, including India, providing a comparative analysis and highlighting best practices. It assesses the regulatory environment, the range of financial products and services available, and the efforts being made to reach underserved populations.
I'm curious, how does India fare in this global assessment?
India has consistently ranked high in the Global Microscope Report. In 2019, for example, India secured the 5th position among 55 nations. The report specifically commended India for its efforts in reducing the gender gap in financial inclusion, highlighting the initiatives aimed at empowering women financially.
That's fantastic news. It's encouraging to see India being recognized globally for its commitment to financial inclusion. Are there any other reports that specifically focus on India?
Yes, there is. In 2018, the Department of Financial Services in India proposed the creation of a Financial Inclusion Index. This index is designed to provide a comprehensive view of financial inclusion within the country, tracking progress over time and identifying areas that require attention.
That's a great initiative. What aspects does this financial inclusion index focus on?
The Financial Inclusion Index has three main dimensions: access to financial services, usage of financial services, and the quality of those services. It's designed to align with the format prescribed by the G20, ensuring comparability on a global scale. By tracking these metrics, policymakers can gain a holistic understanding of the state of financial inclusion in India.
It's interesting to see India actively participating in global efforts to track and improve financial inclusion. Are there any other global reports or databases that you would like to mention?
One more important resource is the Global Findex database, published every 3 years by the World Bank with support from the Bill and Melinda Gates Foundation. While it doesn't provide rankings like the global microscope, it offers valuable data on the percentage of people with access to banking, credit, and other financial services in different countries. It's a rich source of information for researchers and policymakers working on financial inclusion initiatives.
It seems like these reports and databases provide a wealth of information, helping to measure progress, identify challenges, and inform future strategies for financial inclusion. Speaking of challenges, what are some of the key hurdles that India still faces in achieving full financial inclusion?
Despite the significant progress, several challenges remain. The Global Microscope report, for instance, has pointed out the lack of full interoperability across different payment systems. This means that transactions between different platforms aren't always seamless, which can create hurdles for consumers and limit the reach of digital financial services.
That makes sense. We need a system where different platforms can talk to each other smoothly, facilitating easy and convenient transactions for everyone. What other challenges are highlighted in these reports?
Another significant challenge is the persistent digital divide. While India has made strides in expanding digital infrastructure, a large segment of the population, particularly in rural areas, still lacks access to the internet and digital devices. This limits their ability to fully participate in the digital economy and access the benefits of digital financial services.
This really highlights the importance of bridging the digital divide to ensure that everyone, regardless of their location or socioeconomic status, can benefit from financial inclusion efforts. What other concerns are raised in these assessments?
Financial literacy remains a crucial area that needs more attention. Many people, especially in rural areas and among low-income groups, lack a basic understanding of financial concepts, products, and services. This can make them hesitant to use formal financial channels or, worse, vulnerable to scams and exploitation.
It's clear that education plays a critical role in empowering people to make informed financial decisions and protect themselves from financial risks. Are there any other areas that need to be addressed?
Building trust in the financial system is paramount. Many people remain wary of banks and financial institutions, preferring to rely on informal channels like moneylenders or informal savings groups. This could be due to past negative experiences, a lack of transparency in fees and charges, or a perceived complexity in dealing with formal systems.
So it's not just about providing access, but also about creating a system that is user-friendly, transparent, and instills confidence in consumers. What steps can be taken to build this trust and encourage greater participation in the formal financial system?
There are several strategies that can be employed. First and foremost, financial institutions need to prioritize transparency in their operations. They should clearly communicate fees and charges, provide easy-to-understand terms and conditions, and offer accessible customer support channels to address any queries or concerns.
That makes sense. Transparency can go a long way in building trust and encouraging people to feel comfortable using financial services. What else can be done?
Financial education is crucial. By equipping individuals with the knowledge and skills to manage their finances effectively, we can empower them to make informed decisions and navigate the financial system with confidence. This involves promoting financial literacy programs, offering educational resources, and even integrating financial education into school curricula.
That's a great idea. Starting financial education early can have a lasting impact on individuals' financial well-being.
Another important aspect is addressing the specific needs and concerns of different segments of the population. For instance, we've already discussed the importance of women's financial inclusion. To truly empower women financially, we need to address the underlying social and cultural barriers they face.
That's a crucial point. Financial inclusion goes beyond just providing access to services. It's about creating an environment where everyone feels empowered and supported to manage their finances effectively. What are some of the specific barriers that women face in accessing and using financial services?
Women often face social and cultural norms that limit their control over financial